Hi, everyone. How's everyone doing? Hello, warriors. Everyone doing okay? See the gold chart up here? Hi, Rena, Jeff, Brock, how are you? Alexander, all my trading warrior and brothers and sisters, Alexandra. Okay, so let's start here. Okay, so we got a little bounce in the dollar. You know, I've had this blue line drawn for a long time, didn't quite get there, and took partials up here. We still could make another trip down because of this, but I know it's contrary. Hello. There's the daily. So we have an inside day, you know, not enough to turn it. Still think we're going to put in a higher low, which will, you know, I think some bears are going to get squeezed if that's right. Trend line's coming in back at this 94 level, 93.80, 94. So it's got some work to do. Both pound and euro are down. This move in EG did 1 hour. This move in EG was surprising. I don't know if I want to give up on the long side. You know, for a while, the Blake's been showing it. I've been looking for it. It was a 61.8 level in cable. See this? Did it in a day. I mean, you know, to the pip. But I can't short it with this kind of momentum here. So, you know, I'm going to need some type of, even the 15-minute, confirm maybe one more high to clean out stops above the high, although I've seen a lot of confirmed highs and lows have actually ended up being that, but I'm going to stick with my rules, and you know, I don't short 80 RSIs, although I could remember it worked up here in euro at the 91.60 level. We were right here, yeah, up here, see. So it did end up being a high for quite a while. So I don't know. I can't get bearish this pair, even though we had this huge down day, especially now that cable is at 61.8. Putting in an inside day. Euro, same thing. Euro not as strong with the RSI structure. Interesting, you know, I had this channel drawn. I thought I might get back to it. It actually went back inside and then gave it up. But then again here, you know, you have confirmed high on the 4 hour, confirmed high on the 2, and we're back to support. I think Blake was talking about looking to buy a pullback to 118 yesterday if we get one, and pretty close. We got to 1816. Uh-oh. Euro Aussie. Did the Euro Aussie retest the breakdown? I saw it was on its way to do so yesterday. Not quite, but this is going to be the key area. It really, you know, we'll see if we get a test of this ascending triangle. And let's see, what else was I going to talk about? So I still think we're going to head higher in the metals, but I do believe that we're closer to this correction running its course here in gold silver ratio. I'd love to see a rally back towards 26. I don't know if it's going to happen in silver now, but you know, up here around this 50-day up here, clean out the stops up here. I still think that we could see this. So if we get one more dip in the dollar, you know, because we didn't have divergence, and say we head down to, you know, 92.40, 92.30, perhaps that gives the gold and silver one more pop. You know, for everyone trying to be bearish S&Ps, I know we've come down quite a bit, but when I look at it, I never catch these kind of tops because they're just rolling distribution tops, and you need the patience of a saint, and then you still have this. I still think there's a chance for one more new high in S&Ps. 200 day moving. Okay. Okay, Jess. Support 130.80. How do I get in your hedge fund? All right. Hey, Blake, how are you? What are you thinking today, buddy?
Oh, I was thinking you should be continuing to talk here because I've got nothing to say. So,
okay.
Yeah, me neither. Let's just close it. Thank you. Thank you, everybody.
All right. Isn't this kind of the area that you talked about yesterday that we could pull back to in euro?
What's that?
For a buy, the euro.
For the euro,
you drew kind of like a
map.
Yeah.
Yeah. I'm sorry. I had to step out for a bit because I had to deal with something.
Okay. All right.
So yeah, I feel that like the euro would come back down towards 118. 118.
I remember everything you say, you know, and everyone else.
Yeah, I think 118, probably like 118.10. This is a 38% retracement, is somewhere around there. I took a lot of my euro long off the table yesterday at 118.78. So about 50 some odd pips ago, as we hit that 127% extension. And yeah, I'm looking to add back down here. So just letting it get down here, you know,
okay.
Trying to be patient.
Yeah. Okay. And
yeah, so it's been a relatively slow overnight session. We saw the markets came off in Asia, and just so you guys know, Paul Franco was he was in the chat room saying, hey, watch these headlines, don't fall for it, blah 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 blah, which was the correct assessment at the time, because everybody got all the markets came under pressure when there was the announcement that Russia and Iran had sent, I didn't even catch the whole story because I was dealing with kids and stuff and family stuff. But yeah, he was in the chat room saying, hey, just don't, be careful what you're listening, be careful about these headlines. And lo and behold, stock markets bounced back overnight. It's not like we're seeing huge sweeping moves, but we didn't have any follow through on what we saw last night. Now it's important. So anyway, yeah, I mean, it's been a hold on really quick. It's been a pretty quiet overnight session. We've been kind of searching for things to do, but I think there's some decent setups for today. Today we're still waiting on the possibility of a
deal.
Of a deal. I mean, how do you feel about the stimulus deal right now?
I feel that. I think that the Republicans only want to go 500 billion, and some don't want to do anything, and Pelosi doesn't want to help Trump. So I think we're at we have a dysfunctional government, and they're not going to be able to get anything done. That's what I think.
Okay, we've talked a little bit about this.
It's how long will the market be able to hold together with this not happening?
Right. Let's pull together what we know and kind of, everybody knows this is all coming to this stimulus talk, and this is what's really held up the market the last few sessions. And by the way, just so you guys know, I'm going to try not to make this a political conversation, but I want to make it more, and here, I'll take over the screen here. I want to
Okay.
make it more of like, let's say let's take some information of what we know, and let's try to make a few assumptions based on what we know. Okay. So first of all, we know that there's some sticking points with this, with the whole negotiations. You know, a lot of it has to be state funding, right?
Mhm.
The size of the deal, as you pointed out, you know, there's a lot of fiscally conservative Republicans that just don't want to go more than, you know, what is it, 500 billion. You know, and then you start getting in the almost $2 trillion mark. There, you know, there's a lot of people will say that there's no way that, you know, a lot of Senate Republicans will be able to go with that. At the same time, you know, you have, you know, the White House that says, you know, we'll do up to 2 trillion and or whatever the number is, 2 trillion, 2.2 trillion, 1.9 trillion. What's a couple hundred, you know, billion amongst,
yeah, friends.
you know, amongst friends, who cares? But you know, the fact is that, as you pointed out, there's a lot of Republicans that won't go for the that big of a deal. And, you know, Trump says, well, you know, don't worry, they'll fall in line. You know, they'll fall in line. They'll do what I say, basically. And you know, there's a couple of different sticking points. You know, a lot of it's at the state level, and that's because, you know, well, I'm not going to say the reasons why, but there's, you know, there's state funding that's a problem, and then there's a couple other issues that they're working through. But the, you know, if you think about, like, from a timing perspective, you know, you would think that all these senators, they want to be in their home state for the election. They've got to try to, they've got their own seats to worry about, right? So are we really going to be able to get a vote out this week, like today, tomorrow, and then it written up in you know, and passed? And, you know, my opinion is, and this is an opinion, and this is based off of what's happened over the last 3 years. You know, Pelosi and Trump they haven't talked in a year. I would characterize Trump as fairly abrasive with her, right?
With her?
Well, with it, well, okay, with everybody, but you know, calls her Crazy Nancy, and, you know,
Oh, yeah.
you know, all sorts of names. If I'm Nancy Pelosi, and I'm just going to put myself in her shoes really quick, I have to imagine that she is probably at a point where she's like, look, I'm 80 years old. I don't know how much of a career, let alone life, I have left. But, you know, this guy comes in and he, you know, just, you know, his, you know, and this is going to be in her view, has just wreaked havoc on our political system. And he's, you know, he's made it personal with me. I'm going to stick it to him, because if I was her and I was 80, I'd probably be feeling the same way. And so, I mean, what's the worst thing that she could do is, you know, probably make sure that this takes long enough to pass that there are not going to be checks sent out to the American people with his name on it, so he can lay claim to it. You know, that is my opinion. It's more of a timing thing now, because I think something's going to get done, but, you know, but then, you know, you're also, you know, there's a little bit of risk there, because how about if, you know, the dynamics of leadership from every level changes, and, you know, is this to her own detriment? I bet it is. But do you think she cares at her age? Probably not. I don't know. And you know, the sad part about all of this is it's at the expense of the American people that really need help. And so, and that sucks. But it's politics, right? So again, those are opinions, and the fact is this has been dragged out, and they can make all the excuses they want, but I believe it's being dragged out. It might be being dragged out on both sides too. I mean, maybe, and let's just think of it from this point of view. Maybe Mnuchin knows that there's no friggin' way this is going to pass, but we got to keep the conversations going because we've got to keep the stock market from selling off, because Donald Trump also hangs his hat on the stock market performance. So, it goes both ways, and maybe they're both playing that same, let's just drag this out. Let's just drag it out. Pelosi and the Democrats have their reasons for wanting to drag it out. And you know what? Republicans may want to be dragging this out for their own reasons. Does that make sense? I mean, I don't know if you want to add anything to that, but what we are dealing with is we're dealing with gridlock and nothing's getting done, and the markets are just stuck. And so we're stuck just trying to figure it out. And again, I don't know. I just have opinions, and I don't know what's happening behind closed doors. It's not like I have a special ear, like I've got, an ear in what's going on with some friends over at Goldman Sachs that talk to Stephen Mnuchin on the side. I'm just trying to make sense of it all, as we all are. And, really identifying where is it that the market starts to get, where do we start to break? And I'm still in the camp of 3480 in the S&P, and 3420 broke overnight, but it was in Asia. It was those headlines, and I'm not falling for it yet. So I think we have to look at maybe 3400 as being more of the breakdown point. So
there is one thing that caught my attention last night, Blake, when they were talking about election interference. The NIH head guy, who's an appointee, he doesn't come from the like government work, CIA, intelligence community, said that those emails that were threatening Democrats to vote for Trump was to make Trump look bad. It came from Iran. Said Russia was doing things, but didn't mention it. Trump has had a long-running feud with Iran since he was in office. Backing out the deal, everything else. It concerns me that he might be singling out Iran for election interference, and desperate people do desperate things, and I'm worried about him using that as a reason to attack him. He could use that too.
It's possible. I mean, I think anything's possible
Everything
at this point in time. And Leon was in our chat room yesterday, and he's been in my chat rooms prior to ForexAnalytix for a long time. And I want to say closing on 10 years here, probably 8 at least, maybe going on 10. No, maybe probably around 8. Anyway, he actually met Steve and Joe out in New York during one of the trade shows. He flew out from like Seattle. Anyway, he's a great guy. Decades of knowledge. I think I would say semi-retired in like the Seattle area. Anyway, he posted an article yesterday, and it was interesting about China. And by the way, guys, I'm just kind of wasting time right now because nothing's moving. But I'm going to get into the charts here and just give me about 2 more minutes. He was put in a chart or an article about China and about them moving closer and closer to take over Taiwan. And this is going to be one of those things that I think really comes into play over the next year, because we're talking about conflict here. And ironically, a guy from my office, FX Macro, for those of you that are on Twitter, he had tweeted something about China moving all these missiles over, like these missiles over to the what do they call the strait there? That's between Taiwan and China. Anyway, it's interesting. You know, you use this confusion type of time if you're China to make more aggressive moves on what you think is yours, and in this case would be Taiwan, right? So, yeah. I mean, I think a lot of this is happening while you got the world's number one, arguably maybe number one superpower. Let's just call us top 10.
Yeah,
we might have slipped in the rankings a little bit, but let's say, you know, one of the top superpowers in the world. We're fumbling around trying to figure out our own
everything.
Political nightmare that's going on, and we're dealing with this COVID.
Yeah,
You know, I mean, you couldn't have planned this better if you're China and you're like, oh, I planted a virus in the United States. Watch them try to deal with this, and we'll do what we need to do over here. I mean, if that's how it's all set up, it couldn't have worked out any better. I mean,
Blake,
yeah.
Good morning. Let's assume that
Can I finish my thought really quick?
Yeah, I have a question on what you were saying. Absolutely.
Yeah. So, but let's just say that that they're using this, or they're using this time, whether it was intentional or unintentional, they're using this time to really advance, their objectives. And I think we've got to keep an eye on, China, what they're doing with Taiwan, what they're doing in that region. I think there's a lot of things that we need to, while we're sitting here trying to figure out which foot is left or right in the United States, I think there's going to be a lot of movement elsewhere. Okay, I'm done. Go ahead.
Let's assume that was not the case. We didn't have COVID and there wasn't like an election period and everything else. And let's assume that under any circumstances, China made a move to annex Taiwan or whatever. I mean, if not annex, something in between or whatever. So what? So what goes to, I'm not saying that's not a significant move or development, but I mean, what would you suggest the US should do under, let's call them ideal circumstances?
Kill everybody.
Circumstances. No, my point being is that
bomb them all.
my point being, I'm not a fan of Trump. That doesn't get me to the opposite side of the argument, since I have the luxury of being an outsider. But if there is one positive thing that I see as an outsider, is that he hasn't dragged the US in another useless war. So yeah, it's too bad for Taiwan, and it's really going to be sad.
I have family there.
Yeah, it's really going to be a sad. It's really going to be a sad development. But so what should the US do?
Well, we have a treaty. We're committed to defend them.
Okay, committed to what? What would you
treaty?
Suggest? Yeah, but
to defend Taiwan against China.
No, out of curiosity, Dale, what would you suggest? Let's say that there was a referendum about it. Okay, guys, let's all vote. Let's all Americans vote what we want to do about it. What would you vote for?
I'd have to think about it.
You see?
I mean, it's not. There's no easy answer, Steve. I mean, that's
exactly
that's the thing. I mean, but again, it's a game of chess, long term.
Game of Thrones on a global scale.
But if it is a game of chess, it's lost before it begins, because there is no way against other countries. Absolutely, against China.
I feel rooked.
Against China, what's the US going to do?
Rooked.
Yeah, I mean, at this stage in the game, but again, it's advancing your players where they need to be for the eventual kill. So if China's intent, I mean, they're playing the chess game. If China's intent is to eventually, forcefully take over,
they want Taiwan.
Yeah, they want to take Taiwan. They're using this time to advance their pieces and strategically place them where they need to be. So anyway, and that's way more complicated than my gold analysis right now. So let me go into some analysis just so I can get this out of the way, and then I'm going to let you guys take over. But gold, this is a little scary, guys, because gold was breaking out yesterday, and we're back towards trendline support. And I'm fearful that if we break through 1900, that's going to be this is going to end up being a false breakout reversal. And so you guys got to watch out, because I am playing gold on the long side, and I'm a little scared that it might have given us a false breakout. So it's just something to keep in mind. I had to revisit the S&P numbers. I put them in 3,400 and 3,480. I got asterisks there. It's actually 3,410, but I'll just round it out at 3,400, because you guys know that that's just a base, an area. Support and resistance is always not an exact science. It's actually, let me take that back. It's rarely an exact science. Unless I can actually look at a place that we've gone to and specifically hit a level over and over again, more than, like, let's say 2 or 3 times, then I'll start looking at that exact number. Like in this case, like down here in gold, this is a double bottom. If it was like a triple bottom, let's just say, and that level was at 1850, 1849, 1849, then I'm going to write down 1849 and know that's the number. But generally speaking, I'm just going to keep it around about figures. So in this case, that's why, the S&P at 3,400. Whoops, I didn't mean to do that. Shoot. 3,400 is roughly where we need to be focused on. We do have some economic data, so thanks for rattling my cage over there. For those of you that were, somebody was like, hey, we got economic data coming up. Yeah, we have weekly unemployment claims, but you know what? I don't give 2 craps about economic data right now. And if you haven't gotten that, if you haven't not understood that over the last few weeks, let me make sure I make myself clear. I don't care about economic data right now. I don't give 2 shits about it. I mean, 2 craps about it. I really don't. Unless it's an interest rate decision, like if you saw what Turkey left, like its interest rates unchanged, and the Turkish lira got absolutely steamrolled today, or it's an actual employment report, like a monthly employment report I'll pay attention to, like non-farm. I really don't care. And unless I start to see some flare-ups in inflation, I just don't care.
But Blake, we had UK steel production today numbers. They're very important.
I know, those are really important. And also the trucker index in New Zealand is another one that I'm really paying close attention to.
The milk production. Yeah.
What's that?
The milk production in New Zealand.
Charles asked, did I catch the lira? I wish I would have sold the crap out of the lira today. We're not trading it. JP Morgan kind of prohibits
exotics.
Well, it was a couple months ago that the liquidity got really, really bad, and they're like, we're not taking orders over this amount. And then we just kind of said, you know what, guys, let's not trade the lira. It's too, and it's kind of been that way. So I haven't touched the lira in months, actually. That's why. But I mean, it's look at that thing. I mean, it's a clear cup and handle. You guys know that. We've talked about this quite a bit. So anyway, all right. But we do have economic data coming out. We do have, what was the data you were looking at, Stelios?
Initial jobless claims.
No.
Oh,
what's the other one?
UK steel production.
UK steel production.
Yes, that one's a big one. All right. So, but real quick, let's pull up let me get it for you. Where's my data flash? Did I just make it disappear? I did. I think I clicked it out. Here's data flash. All right. Hold on. Let's figure this out. Let's watch it. Let's watch nothing move. I did tell you guys a story I think yesterday, the day before yesterday, about I was
Start saying what you mean, Blake. You know what I mean?
No,
Tell us how you feel, okay?
But it was a Philly Fed number back in like 2003 or 2005 or something, and it was so outsized that I had the same attitude, like I really don't care what's happening. It's not moving the market. And then all of a sudden, boom, it was like a 200 pip move out of nowhere. So, I mean, we do have to pay attention, but it's not like my focus right now. It's not economic data. I care about the election, stimulus, and Brexit. That's it. 3 things I really care about right now. And unfortunately, it's all a disaster. Jobless claims coming down. That's good. Okay. Not as bad as expected. That's good. So is the dollar going to do anything? Nope. Oh, dollar yen moved. What is that? 3 pips. All right, good, good. Okay. So let's talk about the dollar yen since I have it on the screen. So this is the chart of the day yesterday, and we've got to watch the dollar yen really carefully while we're below 105. I believe this, one of the things that really surprised me yesterday about the dollar yen's move is I couldn't, and I wrote this in the blog very briefly, but I'll tell you guys in more detail. We couldn't put our finger on why there was such a big movement in the dollar yen. It wasn't equities. Yields went up yesterday. So, you know, I like, you know, what we couldn't pin it on any flow, like any M&A flow. So the reason why this is significant is because when something moves like this and we don't know why, that a lot of times means that was probably bigger flow related, positioning related, and you know, now there's a risk of a continuation. So at this point, this dollar yen, as long as we stay below 105, I can't, I'm going to keep it in range, but I can't be bullish. And I know every time we drop down to 104.50, it's been bought up, but you know, we are in a different world than we were, you know, since earlier, well, for the last couple of years. So, you know, we usually when we're down at these levels, you see buyers swoop in around here, you know, minus obviously the COVID move. So this move post-COVID lockdown was so aggressive that, you know, maybe we'll revisit it again. So now I'm really watching, you know, the support, this trend line, this big trend line comes in around 104.34. I'm going to write down 104 because I don't think it's going to be an easy down, but I think that I'm leaning more towards being bearish here. Okay. Let's continue on quickly, by the way. So the euro, 38% retracement comes in at 108, 118, 118, basically 118.10. Oops. Right where we're at. This is where I want to be a buyer of the euro. We're almost there, right? Here it comes. Guys, we're almost there. We're almost there. Hold on. Just
We're getting a little bit of a risk-off move now. The euro-dollar dropping, metals dropping.
yeah, I'm just making some adjustments really quick. Thank you. And actually, since we're almost there, I can take it all the way down to 118. Resistance 118.70. Why? Because that's 127% extension right here of this move. So if you guys don't know why I sold most of my, well, a lot of it, I say most is a majority, but not all of it, of my euro up here was because it's 127% extension of this move. So, you know, took some profits there. I'm adding back down here. So, we dipped to that 118. We went to 118.11. Yeah, I mean, this is going to be a lot of support down here. Okay. And right back up again. Interesting. Why did the market come off like that? Any reason you guys see?
I didn't see anything.
Okay, while we're above 118, I got to stay bullish the euro, just so you guys know. And it's same as yesterday. Cable. I'm going to give us down to here. Spike high. See where the wicks, where the body's closed at. So I'm going to give us down to 130.70. This was a move that really, whoops. This is a move that really surprised me yesterday. I mean, I know it was headline related, but I didn't expect the cable to rally. But then again, it's all Brexit related, and you know, I don't live in the UK. I don't have a good feel of anything that's happening there, other than I agree with Stelios. Eventually, a deal is going to get done because it's in the best interest of all parties. So I think that's going to happen. It's just all the minutia. I leave it to Amanda in our chat room. She's really awesome at, you know, dissecting all the headlines and the who says what and who to pay attention to. So be part of the ForexAnalytix community if you really want to be in tune with Brexit. Be in the chat rooms. So we stopped at the 618 retracement, which is 131.86. It's a 618 retracement of this move, guys. If you guys don't see, right? 618. I'm sorry, it's 131.70. So that's it. That's where we're at. And as I mentioned yesterday, you know, the underside of this broken channel trend line or this is going to give us problems. And so as we make our way up here, you know, you can see it struggling a little bit. Aussie, what do you do with the Aussie? 50% retracement held at 71.30. Support is at 70.10, 70.20. I know we've written down 70 cents, 70.30, all being extremely important supports. 71.50 is a 50% retracement, right? 71. Oh, I'm sorry, 71.30. 71.30. We are in a range. Kiwi. You know, if this is a head and shoulder pattern, if it really is, we can go a little higher. I mean, we could go all the way to 67.15. Obviously, 66.80 is coming into play right now. Support is the 78% retracement, which is 65.50. Like I said yesterday, chances of us getting down there are pretty slim, and I still feel that way. Unless there's a no deal. If there's no deal, you know, the Kiwi dollar will see that level today. You know, if there's a no deal announced, I still think that there's going to be some sort of deal. There's going to be something because that benefits the American people. I like to think that our politicians, both sides, both Republicans and Democrats, would like to do something good for the people. I'd like to believe that. Whether or not, whether I'm just a a fool for thinking that, I'd like to believe that they want to do what's right. So I think some sort of deal will be eventually put together. You know, but that doesn't mean that that's going to come. It's going to come into fruition within the next 24 hours either. And every minute that goes by, the chances or likelihood of that happening is slimmer and slimmer. So dollar Canadian, this is a big deal yesterday. I was getting long the dollar Canadian yesterday. And if you guys, if you were in the ForexAnalytix chat room, you knew why. We were divergent relative strength wise, false breakdown below 131. You can see relative strength was diverging. You know, I didn't make as much as I was hoping I was going to make in the dollar Canadian on this little rally here. I think I was long at 131. I want to say in the teens or 20, sold it in the 40s or 50, but it's kind of stalled. But look, I think 131 is pretty important support this morning. I think if we get down there, it might be like a second look type of thing. So resistance be 131.80, because if we break that, then we're going to start squeezing. You notice everything's in range, guys. Nothing's changing here, aside from the euro, obviously. Dollar MEX. This is another one. This is another one that I should have played on the long side. I didn't, but you can see the divergent relative strength here, right? as we're going down. But we held basically 21. So I'm going to write that down. It's the same numbers as yesterday, pretty much. I know we had 2104, but I'm going to write down 21 here and then 21, 25, 21, 50. Oops, shoot. I didn't mean to do that. Okay. Dollar Swiss. So the 90.50 level we wrote down, yeah, we punched past it a little bit and then got a little false breakdown below those lows. You know, I think really for right now, I know 92 cents have been resistance and 91.60, which I still think is, you know, intraday is significant. But 90 cents is going to be obviously key support now. So I'm just going to write that down. I'm not trading the Swissy right now, but some of you still might be. And you might also be slamming your head into cement bricks. So if you guys are in one of those two situations, trading the Swiss or slamming your head into cement bricks, then I'll write that down for you. US dollar, Norwegian krona, holding the uptrend line. I'm going to write down 912, 940. Just kind of the range is here. I'm going to write down 912, 940, and we get to 940 if there's no deal. If there's no deal, we reach up for here and then possibly higher. It's a commodity currency. For those of you that don't know, you know, Norway it's you treat it like the Canadian, the Aussie, the Kiwi. No deal, those Norway gets crushed, and then we see these levels again. Dollar index, last but not least. Okay. $2011 to today. Trend line. If you have ForexAnalytix, one of the alerts yesterday, it's back here. It's previous 24 hours. It'll say dollar index is challenging multi-year trend line support. Guys, when you're at a multi-year trend line, you got to start paying attention, and that's it. Okay. So that is a 78% retracement. That comes in at 92.40. So I'm going to write that down as being very important today. Okay. Resistance, intraday. It's going to be back here. Because if we can get back above 93, it might squeeze. The dollar actually might squeeze a little bit.
Nice looks.
Yeah. All right. I'm done. I'm finished. So
no, you're not. You're a young man. You're a young
I'm
man.
Finished for today.
Oh, okay.
I'm gonna go perform some more self-mutilation on myself.
You know what I did last night, Blake? I went to woulda, coulda, shoulda land. What a great time I had.
Man, if I would have just bought the Dow in 1984, I'd be retired by now.
No regrets in woulda, coulda, shoulda.
Someone is in a good mood today.
I'm not in a good mood. It's 4 o'clock in the morning here. Oh no, it's actually 5 now. But,
oh yeah, it's already time for lunch, Blake.
I'm getting a little
there you go
because this crap's not moving, and I'm getting more annoyed than anything.
Yeah,
so.
Isn't it great to have a release? To ventilate.
Huh?
Isn't it great to have a release to get it out?
The good news is it's all you guys. I get to release on you guys. Like that. Anyway, well, hey,
well, good luck today.
I'm sorry I left you with so little time, Steve Stelios. I'm gonna shut up now. You guys.
By the way, fresh out of the oven, Blake. Pelosi says stimulus talks with Trump admin on good path.
Will be ready soon to put pen on
Soon
paper.
we'll be ready to put pen to paper on stimulus bill. Those just came out from Velocity a
Wow.
minute ago.
They're trying to
Pen to paper means that that's going to happen next week. So and what it should say in cryptic just below that is you will not receive a check before the election.
yeah.
Because
Yeah.
the last thing that she wants, and I'm just, you know, if I'm a Democrat and I'm in this position, I do not want Joe Blow or Nancy Doe to receive a check from the Treasury that's got Donald Trump's name stamped on it because he actually had to put his name on the checks.
I know.
Which just
know
between
this.
us, I never understood that. I mean,
No,
It's not coming from him.
it's all.
that
It's
does
all,
not come out of his pocket or anybody else's pocket. I mean, president or whatever. I mean,
No, but you
these
know how people are. They're going to say, "Oh,
know.
Trump gave us this," or
yeah,
Hillary
these
or
are
right.
Biden
these
gave
are
us
We're
public
getting our own
finances.
money. We're getting a loan on our taxes.
Yeah, exactly.
Yeah, and to be honest, if it should have anybody's name on, it should be JP.
Yeah,
No, it
It's
should
all
have-
monetized.
it
It's
should
all
have-
monetized.
It should
That's a
have
good
300
point, yeah.
million Americans' names on it is what it should have. All right,
Yeah.
I'll
right.
I'll let you guys go.
All right. Good
Okay,
luck today,
Thank
Blake.
you. So we're getting closer. Nancy Pelosi may be ready. Let's see what happens with that. We obviously had the data a little while ago. Interestingly, I was looking at the continuing jobless claims number, and you know that not theoretically, traditionally it was around 1.5 to 2 million, roughly on average. It spiked up to 25 in May after COVID, and now it's back down to, what was the print, 8 million. So it's coming down. You know, if you look at the chart, it's actually coming down. And you know, if you want to say that something is back to where we were pre-COVID, when that goes back to 1.5 to 2 million, then yes, we are back. So the trend is looking good, and you expect it, you know, from a shooting up from 1.5 2 million to 25. Obviously, that's going to come down. It's coming down in a straight line in a nice gradual fashion. But anyway, you know, good numbers overall. But like Blake said, they don't matter just yet. And what else is to say? UK.
The things tell you that these are not jobs created. These are jobs that were reinstated. And I'm very much afraid that once this trend is over, we're going to realize that many of the jobs that were initially lost will never come back.
It will never come back. Yeah, you know, that's true. That's true. Moving on, we had UK. We don't have any big news from the UK EU front, although there's going to be more talks, yada, yada, yada. But we did have Chancellor Sunak making some announcements where he did say that we have difficult days and weeks ahead. We'll get through this together, you know, in typical political fashion.
Together.
Yeah, he's introducing a few things, some new grants, like a cash grant, and you know, trying to help the economy. There's a job support scheme which is going to be more generous for employers. You know, there's a bunch of headlines. So they're trying to effectively borrow more money and give it away. Try to smooth things out as we get through this second, well, what seems to be a second wave, interestingly, of COVID. Interestingly, everywhere I read, the mortality rate is a lot lower. If you look at UK death rate in March, April, May, and now, the number of cases are going higher than before, but the number of deaths are actually rising at a really slow pace. So either something has changed with the virus, or they know how to handle it better, or the combination of the two, I don't know. But the good news is that the death rate is lower. Having said that, we're still increasing at record levels in many countries. I think Italy.
Yeah. Many countries are hitting fresh records on a daily basis. That's true.
So that's a problem. And as long as you have enough infrastructure in hospitals to handle people who need care, you're kind of okay. But you know, when you run out of beds, that's the problem. But you know, the second wave is definitely here. How deadly is it going to be? How, you know, what impact is it going to have? It's difficult to say yet. But we're still in the beginning of winter, and you know, winter is coming. So you know, let's see how that that goes on. Other than that, I don't really have that much this morning. There was nothing data-wise, and really no headlines or any developments. We seem to be, metals seem to be going back a little bit, going lower. Kind of makes sense after a couple of good days, and the dollar is also going lower, but really nothing major. Metals have been very, I mean, they've been trending sideways more or less, but the daily moves have been pretty significant. Like silver, especially, plus 2%, minus 2%, is not easy to trade at all. So
I don't think they're ready to make the move yet, Stelio. I think we're still in consolidations. I'm pretty sure that once the move begins, we're going to know about it quite immediately. I think, we're going to start seeing day after day, like, big ranges. So I think people shouldn't be, just try to get chopped up. They should, remain a little bit more patient.
Yeah, I agree 100%. I was talking to a friend of mine about gold and silver, and I said, look, these are my levels to get long. I'm not touching them before. Or if we break out comprehensively higher, then I'm unfortunately going to have to chase it. But you know how it is. You miss the first couple, 2, 3, 4%, then you get the rest. So
yeah, which the rest can be a lot.
Yeah, I don't mind missing the first little bit, but I want confirmation that we've broken out, and we haven't yet. So at the moment, I'm not touching them.
What would you consider a breakout still? Over 26?
In silver, probably a little bit more, 26 and a half, I think. Above that, I think we're going to be, well.
Because that's kind of where I'd like to short it, around there.
Yeah,
26.30. Yeah,
or maybe one
I
more.
I want a weekly close above 26 and a half. That's what I want.
Okay, great level. Thank you.
No problem.
How about you, Steve?
Having to do with silver, gold, or both?
Both.
I think gold is, knocking the door of a breakout here. But, if you want, like, for full confirmation, I think like 1980. Above 1980, I fail to see how we're not already in another leg higher.
Okay.
Having to do with silver, I would agree with Stelios, 26.20, 26.30, significant area of previous support. I think if we go through it as resistance, 26.70 is the 61.8. I think anywhere above that, then the chances that we're still in corrective territory increase substantially.
Okay.
And I want to thank our friends who are commenting, and they're saying that the death rates in COVID is a lot because of more experience on various medicines and treatments, etc. And I think they're right on that. So thank you.
I think one reason is that, and I think there is also another reason, is that COVID rates seem to also go down, because the difference between now and, for example, March, is the fact that on March, the vast majority of the people that were actually being diagnosed were not only people that actually had COVID, but people that had very acute symptoms of COVID. While today, there is a lot of testing. So we find out about a lot of people that ceteris paribus with March conditions we would never find about.
You know what's so worrisome in the U.S.? There are some states where infection rates are up while testing rates are down.
Yeah, that's obviously the opposite signal. It's a signal that things
they're not
really
testing
moving.
as much, and they're still finding more cases.
Yeah, that obviously shows that things are getting. I mean, in areas that you actually might test less but find more people. Yeah, that's obviously a very worrisome sign.
Yeah.
But in any case, I just think that you have to hope for the best. That it's impossible to to live your life completely isolated unless you are really in a very dangerous segment of the population, in which case you should do what you can. Everybody else should just be very careful and try to live as much of a normal life as you can live within that context, and hope for the best. Okay, so back to the markets again. Now, a couple of comments. First of all, USD yen, I like how it found support once again. We were talking about this area, nice confluence of support. So keep in mind, no reason to be bearish as long as we're above it. That's at 104.30. So I think it proved yesterday its significance because we stopped exactly there. I think there is nothing to talk about here unless we break down, but I need to mention it because we haven't seen a real move from this pair for a long period of time, and now that we're just on support, it's worth mentioning because you never know, we might actually break it, and we might actually do something finally with it. Now, another interesting fact: cable back testing, two channels. One is the broken channel trend line support that you see here in green, and the other one is the blue channel, which has defined this latest rebound. So these two trend lines confluence with the 61.8% fib, and that's exactly where we stopped yesterday, and that's exactly where we stopped today again, because at some point we retested that exact same level, and so far we failed to break through it. So bottom line, you like the cable short, this is an excellent area to be short for all the reasons I just mentioned. You have a very good risk reward. Now we break through this triple confluence of resistances, then something else is happening here. So, we are at a pivot area, and that's always good, because pivots, when they're clear, they give you clarity, and they also give you very clear levels and risk rewards, so you can do what you wish with it. I mean, you have a bullish bias, you buy it at a breakout, you have a bearish bias, so this is the perfect place to short it. Now, we more or less already covered the metals. As you see, silver is still riding this channel. We're going to rather soon find out if this is actually corrective, or there is another leg higher that has already begun. If that's the case, which we should see an acceleration higher. Gold, we can't be 100% sure if this is the trend line resistance we should be looking at. And the reason we can't be sure is because you can choose any random second point for this line to pass. So this trend line is as valid as this trend line, right? Because you don't have other points in the chart to pass from. If there were more, then you would be able to say that, okay, it passes through 3 points, so this must be a solid breakout. But in this case, who knows if this trend line resistance is there or there, or it's going to prove to be there. So bottom line, there is no perfect way to know when we actually break out, with the exception of one, measuring how much you've moved in distance, and most importantly, gauging momentum, because once this move continues to the upside, momentum is definitely going to be very, very different in comparison to what we've had since we started this corrective move. And why am I saying that it's corrective? Because it's clearly corrective. It's slow, it's overlapping, it takes time, for little price movement, which is the exact opposite of what was happening as we were moving higher. So in my eyes, there is clear evidence that the trend remains to the upside. And as I said, I'm waiting for momentum and price to tell us with certainty when we've actually resumed the upside. Now, natural gas confirmed the breakout yesterday by closing significantly above 290. Seems to be consolidating its gains so far today, but as I said, I think this is a valid breakout, so there's nothing more to say. Next upside area of resistance is at 326, but I think we might move a lot higher than that. Having to do with crude oil did suffer yesterday, so it still leaves open the possibility that there is one more leg lower before higher, right? So still two scenarios on the table. One is this, the other one is this. At some point it will have to make a decision. Once again, we're going to have to wait for momentum. One thing is for sure, shorting it yesterday or the day before or the day before that, from a risk reward perspective, it made sense. It still makes sense because there is a good chance that there is still another leg lower. Personally, as I've said, I don't want to be short crude. I want to be long crude, but that's not the area I'm interested in. That's not the level I'm interested in. I want to be long only if I get, the price I consider to be the right price, which is lower from here. I wouldn't consider anything less than like 34. Ideally, I would want to see 29, but you know, at the very least 34, and depends on, you know, how the price action unfolds from there. Could you please check euros? Yeah, I can. Dale, do we have an interview today?
Yes, buddy.
Who do we have?
Peter Goodburn.
Oh, we have Peter. Okay, that's excellent.
Yeah.
Okay, I'm really interested.
He's not here yet.
Okay, so euros. I think we can all agree
He's here.
this is okay. We can all agree this is a significant breakout from this area, the 165.50 area. I think we might just backtest this area as support, in which case I would expect more upside. So I think against the breakout area, there is absolutely no way to have a short-term bearish bias. At the very least, I would expect, you know, another leg higher to finish up at 170, 171, 172. So even if this is a corrective move, I think it still has more to run. Okay.
Nice.
Anyhow, that's, you know, that's the time we had today. So let's get Peter.
Okay, I'm going to ask him about the ruble for you, Steve.
Good, fine,
Okay.
absolutely.
All right. All right. Welcome back, Peter. Hiya, buddy.
Can you hear me?
Got you.
Yeah. Hey, Peter.
Hi,
Hey,
Peter.
Steve. Hi,
How
Dale.
have you been?
Oh, good, thanks. Yeah, very well, thank you.
Good.
Good to be with you today. I just
Good
caught
to
the
have
end
you.
of your presentations there. So I hope we can sort of concur. You know, I'm not even sure. You've got so many lines on here. Gee.
Well, Steve does his technical work with his son, with Spider-Man, his son Jake.
Yes,
And
absolutely.
he throws out some of those, you know, sticky, stringy things all over Steve's charts.
Spider-Man could do something that we can't. That's going up all the time. I mean,
well, I don't know. The S&P hasn't done a bad job with that. So,
yeah.
Anyway, Steve will get Peter to share his screen, and you know we're going to talk about something that, you know, because the dollar is so key. Want to go over this with you, Peter, because you know, I'd like to kind of start off with your long-term count in Dixie, because I think it's something that, you know, Americans need to be aware of. You know, that if your count manifests in the next several years, that people have to protect their wealth. I mean, people have needed to do this since Bretton Woods, but what you see coming here, as everyone could see, 49.35 for, you know, a downside target. It's going to cut their wealth in half if they're just sitting on cash or stashing cash. So, you know,
I mean, this is
tell us about this.
Yeah, it's pretty severe, isn't it, when you look at this?
Yeah.
I mean, one of the things I've shown when we've talked together in the past is a longer term cycle. Perhaps I just pull that up, actually, just a second. But, you know, the long term cycles are, you know, very helpful in terms of seeing where the pattern rhythms are. One of the things that we get lost in day to day generally is the fact that when we think about the dollar, we always think, yeah, it's a strong currency, it's a reserve currency. You know, it's basically in an uptrend, but it's actually not. I mean, since 1985, it's actually been in a downtrend. And one of the cycles that I tend to show everyone is this one, which, you know, shows the repetition of highs and lows. And for those that are unacquainted with cycles, the term cycle is basically where we connect sort of the peaks and a trough. And that particular in time interval, in this case, it's about 15.6 years from trough to trough. You know, this is a generic cycle. And sometimes you get to price action here, which is a bit late. So we call this a right translation. And, you know, if it's a bit earlier, left translation and so on. But generally speaking, if you have a centrally translated cycle, it means that you take the full cycle from trough to trough or from peak to peak, and you halve it, and the cycle is generically, sort of rhythmically, giving you peaks and troughs roughly around the same time. And that's what we've got. And this one obviously peaked here in late 16, early 17. If you remember, the dollar index topped out in January 17 here.
Right.
If I just mouse over that, you can see the date. And that means we're heading down. And to some extent, we can do, in cycle work, we can do what calls phase variancing, which means that we can align sometimes if tops and bottoms are not quite aligned, we can phase variance the cycle slightly across to the right or to the left. But when you look at very long-term cycles, this can often mean that you're shifting dates out 2 or 3 years at a time. So even though the cycle chart, this one is showing 2023-24, if we phase variance this slightly to the left, show that the cycle peaks, so this one would be shifted across a few years here and here, we could end up with 2027 quite easily, you know, which is 3 years, you know, taking more time for this to decline, which I think is, you know, entirely possible. So we shouldn't necessarily sort of pin a particular annual date on such a long-term cycle like this. But what it does show is that we're heading down in, you know, about 47%, 50% thereabouts, and that's significant if you're holding dollars. So how do you hedge that position? I mean, certainly we have.
Good segue. You don't need me today. I like it. Go ahead.
Sorry, you can interrupt me anytime you like.
No, I mean, you know,
if I've got the podium, man, I'm on it.
Thank you for making this easy. No, you know, go ahead. Yeah, definitely great segue. How do you hedge it, Peter? That's you know, hedge it or spec on it, something.
Yeah, I mean, we have dollar income as a business, you know, you know, over time, I mean, you can go to the bank and you can say, right, well, we need to dollar hedge our income streams for the next year. Okay, well, that's fine. You can hedge it for a year and you think, great, I've made a bit on the hedge. I've lost a bit on the income stream. It's balanced itself off. That's what the hedge is supposed to do. But if we're 10% or 15% down, and then you say, right, the next year I've got to hedge another year because I'm only allowed to hedge 1 year in advance. Well, that's no good because you're already losing 10 or 15% income from the previous year.
Right.
Okay. And this is a problem that all businesses are going to face. They can't really hedge enough forward. And if you've got a depreciation like this, it's very, very difficult to do. So wherever you're trying to hedge, it's you know, it's an unachievable goal. And we have to, you know, start thinking in terms that we can hedge maybe a year at a time. But every year it goes down 10 or 15%. You know, that's what you're losing per year over an aggregate period. So
do you think a lot of businesses will begin to accept payment only in euro?
Well, you know, when I travel around the world in the last 15, 20 years, you know, hotels, you know, were normally quite happy for you to, you know, to take local currency. And now, you know, we're all transferring into dollars. You know, you probably notice this yourself. You know, you go on a happy holiday to Mexico or you know, or somewhere. And the hotel charges in dollars, US dollars, not in local currency. You don't get any benefit. And we might at some stage later on start seeing that shift in industry where, you know, I don't know whether the hotels and industries will ever recover to what they've done before, but, you know,
right.
You get goods and services and things. Yeah, if a dollar is depreciating over a period of time, then people will start to look at other currencies, accepting currencies in other terms.
Because we've had some famous people in countries to their own detriment want to be paid in euros when it was trading up there at 140. And, you know, the whole world was bearish a dollar at that time. Last cycle, probably your last peak in the dollar. So, you know, it cost Saddam his life. And hegemony runs deep and strong, and I've got to think that the U.S. Probably is going to be happy about this move in the U.S. dollar, except for that it's going to inflate all asset classes and kind of make things look good on the outside, except for when you go to the grocery store.
Well, that's it. You know, it's things like food and fuel, you know, which are, you know, I mean, obviously. The US has now become, you know, the biggest energy supplier, right, in the world,
right?
Producer. With, I don't know whether that will change, with if we're going to stay around $50 on oil or less for quite an indefinite period. I think that there's a good chance it will trend up in the next few years if we get the dollar declining like this. I think gold, oil, and all these dollar-based commodities will have to go up a lot.
Yeah, you see long-term targets in triple digits one more time in the oil industry, and when you think about it, in the oil price, right, Peter? And when you think about it, what would really accelerate the move to green isn't $40, $50, $30 oil. It'd be $120 oil or $100 oil. Okay, so you just have a rally back towards 81, which is still, pretty good rally.
Yeah, I think I've upped it to about $90 here.
Okay, well, see that, in 2023, if that's happening, then the move towards green energy, then it's a no-brainer because it's cheaper. Right now it's kind of a push.
That's right. Well, I mean, I was at a conference earlier this week, and everybody was talking about sort of green energy and the fact that Norway's big sovereign wealth fund is no longer investing in things like coal, anybody to do with sort of fossil fuels. They're moving away from all of that, and there's a big drive for ESG sort of type portfolios, and this is going to be persisting. I mean, it's we're going to be looking at more green energies, more ways to move away from fossil fuel burning. But we're still going to need oil for cars. That is still, we're still 10 years away from when we're all driving electric cars. I think EVs are not quite with us yet. And some of the car manufacturers are only still well behind Tesla and others, because they're still building hybrids and for example, the British Land Rover division, if you go and buy you want a new Discovery, you have to buy some sort of hybrid, which means that you can only drive electric up to about 20 miles per hour, and after that it kicks into diesel or petrol. That's not really a very long-term plan, is it?
Right. Yeah. So I wanted to go back towards the dollar, and most people would know about the opportunity to hedge your dollar with precious metals and euro. What I'm interested in is what has suffered from a stable dollar, not necessarily a strong dollar, has been emerging markets, because there's all the debt denominated in dollars makes it harder for them to service it. So if we're going to have this type of dollar decline, there's probably, even though probably higher speculative type nature of these currencies, and because of perhaps government instability, but who are we to talk in America about instability? That there might be some currencies for people to consider a hedge against their dollars going forward that they may not have even thought of. I know that Steve Volge has a fundamental argument for owning rubles based upon debt to GDP.
Okay.
I guess there's also a pretty good carry. If you're long, you get paid to own them.
Absolutely.
Own ruble. And, so things like, I've never, traded rubles before, but I mean, something like this is interesting. So this could be a hedge for your dollar if you put, you don't put all your dollars into it, but.
Well, I would certainly be holding, if you're sitting on dollar cash.
Yeah.
I'm not talking about day-to-day trading, but you just want to hedge against the depreciation in the dollar.
Right.
Ask your bank or your savings division if they can actually open up a foreign exchange account for you.
Right.
We have those here in Europe, and I've had them in the UK before, where you just ask your bank to open up. I mean, they will charge you a service fee per month, but it might be $20-$30 to keep the account. You pay them a flat fee for it, but given the amount of money that your savings in there, then you know that's negligible cost per month,
Right.
compared to, you know, protecting your wealth. If you think that, you know, there's going to be a 50% decline, I mean, it depends. I mean, if you're only going to deposit $100, it's not worth it, is it?
Right. Yeah.
But if you're going to put, you know, several thousand in, then it might be worth it, you know, upwards. So you could open up a ruble account, see how they feel about that, ask them, see if you could, because this is a long-term chart of the ruble. You can see from the 1990s, we've gone up exponentially, showing a great depreciation of the ruble from 50 cents on the dollar to, you know, now you've got to stump up 76 rubles for $1, which is phenomenal. But I suspect that this will change, and that we're going to see, you know, some quite significant gains. What you could do, if you were able to, is maybe invest in a Russian index, for example, a stock index, which is ruble denominated. Then you're going to get appreciation of the currency, plus you're going to get the upside potential. I'm just going to go into stock indices here and just see. I've got something somewhere on ruble or emerging markets, even better. You know, I mean, but you need maybe the ruble exposure. Let's have a quick look. Here's the Russia RTS, and yeah, okay, we've got this. This is our forecast for the RTS. It's going up a lot.
Oh yeah.
You know, I mean, this should go up a lot, and I think we'll make new record highs in time. So this is always some way that you could look at, you know, buying something in Russia, like an RTS instrument, maybe an ETF or something, and that forces you to stump up, you know, exchange dollars for rubles. You'll get an appreciation for both, which is, you know, a double whammy, and that will far outweigh, you know, basically loss of income streams that you have in dollar terms or for anything else.
Great idea.
You could do the same with Brazil if you wanted to. I mean,
yeah, I'm starting to follow Petrobras. After our last conversation.
Oh yeah, good. Yeah, good. Yep. I mean, Petrobras is good. We could buy Petrobras GGB, which is one of the banks. I was introduced to another one, which is, you know, I mean, if you're speculative in nature, there was. I've actually got to do a bit of research on it today. It's a share price called Cogna. It's an educational equity, Brazilian equity, which one of my clients is asking about. And yeah, at the moment, it looks as if we've got some pretty interesting scenarios here. We've got, going back to the financial crisis, big 5-wave pattern up, a nice 3-wave correction. You know, it's coming down in a correction at the moment, but that's okay. It's a great opportunity to buy this thing. This thing will go to massively to new record highs. I mean, it's trading at $5. I think this is 5 real. So
so the same type of concept. You're buying the real along with a nice stock chart.
Exactly, and here's the currency, and you know, this entire 5-wave program up here is finished. We're going to see massive appreciation in the currency and a devaluation of the dollar basically against it.
Yeah.
You know, this thing is going to start running down like this over the next years. So yeah, I mean, don't be fooled by the inactivity at the moment, but you know, this thing is something that you can easily do.
Yeah, these are, you know, this is a great opportunity. You know, it's, well, you know, what the Chinese say, the definition of opportunity is danger and crisis. And really the danger is you miss the opportunity. Danger and opportunity. So, you know, there were some people today talking about the lira. I guess it's made new lows. And last time I talked to you, you said there'd be another high in the Turkish lira. Not that I'm interested in I think that one I would just take a pass on, but it's been one of the weakest currencies. And you said some of these other ones may have already made the turn, but the lira had another wave left.
I think we've got to get up. I've got to update this a little bit, tweak it a little bit, but I think this target at 860, 859, 858 is about right. Probably could do with a bit of a retracement first before getting up, but I think it's, you know, I mean, it's in its last phase of development to the upside. So
I guess there's
you know,
some geo stuff going on with Turkey right now, right? Geopolitical stuff, you know, war talk, or I don't know with who. You know,
well,
but
yeah, Erdogan has, you know, I mean, he's pretty much got things under wraps there. He can do what he wants pretty much, but they've got still quite big inflationary pressures going on, which is fueling the weakening of the currency. That's why you're seeing it trend up still. But I think that that could change as soon as the dollar finishes its counter trend rally. And we can take a look at the short-term dollar index in a moment again. I flashed it up earlier just now, but once that happens and starts turning down, then the dollar ultimately will probably sort of trend down against most, including this. So I think that this overall picture is coming to a phase where it's probably not got much left to go.
One of our attendees just made his call. He said it's going to 10.
It's going to go to 10, as high as that.
Yeah.
And why?
Why, Amira? Because you're for. Who told you that?
Is there a reason why it would go to 10? I mean,
yeah, just give us just because you have a feeling, or technically, or
I mean,
you
I like
wanted
to,
you just wanted some attention today.
well, we all like that. I mean, we all like a bit of attention.
Yeah.
No, I mean, it would be good to know from our friend who's, you know, why he's got 10. I mean, I'd like to try and substantiate that. I use a lot of fib price ratios, and this one I've extended waves 1 to 3 by 61.8. That comes in about 844, a little bit higher. And
also, we have a Brazilian in here, Gustavo. Is from Brazil, and he said the fundamentals of COGN3 are all very good.
Good, excellent. Thanks for the thumbs up.
What he said.
That's good.
So what do you want to? You know, you've been here so many times, Peter, and really, you know, I love your stuff. And yeah, if you want to wrap it with the dollar, the short-term dollar index, but and you know what, your prices are very reasonable for the type of work you do. I know the time you spend there, and I want to make sure that people check you out. So
thanks a lot.
Okay, and you know what? And it's not just currency. Peter made a great call. The bottom in Bitcoin at 3. And then, you know, when everyone was getting bulled up, he saw another pullback to 7. And here we are breaking out. So, you know, it's not just currency. You know, everyone's wrong sometimes, Peter included, but I've seen a lot of great forecasts from you, Peter. So I'm hoping people include you in their intelligence gathering.
No, thanks a lot. I mean, yeah, just we can wrap up in a moment with a look at the Elliott Wave Compass report. It's $39 a month. My God, if you can't afford it, and you might as well stop trading. But we try and make it as competitive as possible. And yeah, when clients normally subscribe, we keep them. Yeah, you know, we don't have any rotation. It's been really great, and people are so nice and friendly, and we're happy to sort of bend over backwards to try and help you. If you've got a query, you can always interact with us. So we're quite happy to do that. I mean, I've just shown Bitcoin, but actually, you know, I mean, Bitcoin, I think if anybody's listening and interested, I think this downswing here back in August, September, I don't think that's fulfilling the entire categorization of a good second wave correction, having finished 5 waves up from March. So I'm working off the assumption that we're in an expanding flat and we've got another leg down. But that will only happen if the stock market drops, because I think there's quite a fixed correlation there. And if the dollar starts to pick up again, as I think it should, that will also trip down, because don't forget, this rally, this very, very strong rally that we've had this week, has been backed up by the dollar's weakness. And it's been very evident. So if we want to see what the dollar's doing, my guess is that we're bottoming out here. This is a little bit of a zigzag correction for wave X. And the preceding upswing from the beginning of September is a first zigzag in what we call a double pattern that's going to trend up here. Again, you know, proportion in your working with Elliott Wave, you need to really start thinking about proportion and where the tendencies are for patterns to correct to, how far they extend to. And our work on fib price ratios basically has been a bit pioneering in the last 30 years. We did this far beyond anybody's ken before, and we place a lot of emphasis for it because it can tidy things up as well. But here you've got 5 waves down from March, and Elliott said that a correction should get back to wave 4 preceding, and that's sort of roughly in this price territory here. And that's why this first zigzag isn't enough, really.
Right.
And why we should get, in the next few days, this should bottom out. I think we might get one more twist down tomorrow. By then, we might start getting this swing up. I don't know what's going to trigger that. Maybe, the negotiations for a new aid package in the US takes a back seat. It fails because a lot of the pressure on the dollars come because, there's inflationary pressures coming in. This is why the dollar is going to be going down in the next several years, and why interest rates are going to be going up a lot. You're going to see the dollar collapse. You're going to see commodities like copper and oil go up a lot during that phase. Maybe gold quite a bit too. There's still a leg missing to the upside on gold at some point later. Not now, but I'm bearish at the moment on gold. So yes, there's this is all tied into it, but. I think we can get the dollar up here first.
So that'll be a good time to, a little bear market rally to maybe lay on some of these, COGN positions or Russian RTS positions, something like that, after we've squeezed some dollar bears out for a while.
That's right. I think one of the other questions I normally get on the currency side is, okay, we look at dollar Canada. We know Canadian dollars linked to oil. The Aussie dollar is linked to a lot of things like iron ore, some of the big commodities like steel and stuff like that. What are they doing? But we were asked, what's Aussie dollar Canada dollar doing? Because these two are competing commodity currencies. And from what we can see, if anybody's interested, is that we suspect there's a bit of a correction coming down. This is very atypical to what the stock market looks like. Stock market bottomed in March. It's had a 5-wave price swing up here. This meant that the Aussie dollar was outperforming. Right. At the moment, it's in a bit of a regression phase. Now, that could mean also, if the Aussie dollar is coming down and Canadian dollar is going to increase in value against it in a little while, that probably goes hand in hand with the stock market dropping down a bit, and probably also goes hand in hand with oil dropping down a bit as well.
Okay.
Because I think oil prices, if you want to look at that, oil prices should also drop back down a little bit.
Low 30s, first stop.
We should come down, low 30s, exactly. Here it is, 33 and a quarter. Yeah. So I'm thinking that I'm short a bit of oil at the moment. I had a nice drop in the last 2 days. Yeah. But we should be, you can put a stop above the high. If you're looking for $33, that's a good trade to put on if you're interested in doing something like that.
All right. Well, why don't we go to your website so that people can become part of your community and get your research and get this type of input daily. At least on the letter. And you know what? You don't need your stuff daily because your roadmaps. No one needs to follow anyone's roadmap blindly, but for me, this is how it works. Your roadmaps give me biases, and then I still use my work with RSI and pattern recognition to execute or make recommendations at those levels when my work with the bias I get from you manifests.
Great. No, great. I mean, thanks, Dale. I've just logged into the Elliott Wave Compass report. This is $39 a month. We publish a report twice a week, and we put quite a few contracts in here. You can see the stock indices, currencies, and if you just click on these things, these thumbnails load up, fixed income, and we've got commodities, gold, silver, and crude oil. But basically, if you can use this application, you'll have access to it. You can review the report online, or you can download the report here. And if you click on the S&P, you can start scrolling through all the charts in the report. You can actually see them listed here. These are all. So we've got quite a big variant that we type up and write about. There's lots of currencies in here, and we alternate a bit between, each week Shanghai Composite versus Hang Seng, or we put Canadian dollar in sometimes here as well, and the regular features. And if you want to subscribe to that and take a look at that application and learn, just go to wavetrack.com, go to client, where are we? Registration, subscription.
And I just posted the link in chat.
Oh, thanks. Okay, that's great.
All right.
And here you can subscribe, and it says $39 a month. And there's no auto renew on this. We left it so that you can take it for a month, and if you don't like it, you can leave it. You don't have to contact us, or you can get a little bit of saving if you want to subscribe for longer term maturities. So it's very flexible, and yeah, you won't get tied into anything more than a month, and it costs you $39.
Okay.
How's that?
All right. All right. Well, I want to thank you, my trading warrior brother. Some great ideas. Really appreciate you coming here and being really generous and sharing a lot of forecasts that people could take advantage of and execute at their own peril. So
I like the peril bit at the end. Yeah.
Well, that's my that's my disclaimer. Someone what they say is it safe to trade now? And I go, well, that's an oxymoron. Anyway, thank you so much, Peter. And
thanks, Dale.
Yeah, really
good to be with you today. And
here.
thanks to you. And have a great evening. Yeah.
All right, take it easy, Peter. That's
Adios.
a wrap for us today, everyone. Today is Thursday, I believe. So that's going to be TGIF tomorrow. Hope you enjoyed Peter. And we'll wrap up the week tomorrow. Remember, oh gosh, I almost forgot. Don't just count your cash, your coins, and your cars. Count your blessings. I'll see you guys tomorrow. All right. Adios.